Hi, welcome back to investment planning module. So in this video we will be covering the chapter mutual fund. Okay. So mutual fund is a mechanism for pooling the resources by issuing units to investors and investing funds in securities in accordance with objectives as disclosed in the offer document. Investments in securities are spread across a wide cross-section of industries and sectors, and thus the risk is reduced. What happens in mutual fund is that it is a mechanism of pooling the funds of large number of investors. Someone can put in 1,000 rupees, someone can put in 5,000, someone 10,000 rupees, and there can be 1,000, 10,000 or a lakh investors, and the entire pooling of money happens, and then that money goes to the mutual fund for investment. Now the unit holders or the investors, they invest money in mutual fund and they give their investment preference, which is basically the objectives. Now mutual funds have different schemes with different investment objectives. A scheme can be a debt scheme which invests in debt securities, and a scheme with an equity investment objective, and a scheme with a gilt investment objective. So accordingly, for what the investor has given the mandate, mutual fund invests accordingly. So if you go look at this diagram, you can see what happens is that investor invests. So all the monies of different investors are pooled in, that goes to the mutual fund, and then fund managers who are appointed by the mutual fund companies to manage money, they invest those money in securities. They buy securities as per the objective of the fund. Now why they invest in securities? With an objective to generate returns. So they try to generate returns. Now whatever return is generated, that is passed to the investors, that goes back to the investors. So basically investors pool their money, that goes to the fund manager, then fund manager invests in securities, investment in securities bring returns, and then that return is given back to the investors. This is how the concept of mutual fund works. Now how a mutual fund is set up? So the sponsor appoints trustee, trustees appoint asset management company. Mutual fund is set up by a sponsor. So if you go through the book, you can see there is an example given for the Kotak Mahindra Mutual Fund, and which says that for the Kotak Mahindra Mutual Fund, Kotak Mahindra Bank Limited is the sponsor, and then sponsor appoints trustees of the mutual fund and hold its property for the benefit of the unit holders. The trustees are vested with the general power of superintendence and direction over AMC. So trustees are basically the custodian of the mutual fund properties. Asset management company approved by SEBI manages the fund by making investments in various types of securities. The investment of the fund is taken care by the asset management company, and asset management company is also appointed by sponsor. So sponsor appoints both trustee and asset management company, and sponsor is basically a kind of promoter of a mutual fund. Okay. Now the other intermediaries in mutual fund: custodian. The trustees appoint the custodian. They are responsible for the position, handling and safekeeping of all securities purchased by the mutual fund. Transfer agents, they are responsible for investor servicing functions. These include processing of applications, recording information, processing dividends, etc. Some of the registrars in the Indian capital markets are CAMS, Carvi, Deutsche Investor Services. And then there are selling agents, whom we know as mutual fund agents. The selling agents are responsible for selling the units of the fund to the investors. They mobilize funds for mutual funds by selling the units of the fund. And selling agents can be an individual agent, It can be a bank or an NBFC company, distribution companies, or the direct marketing channel of the mutual fund. So, and all the selling agents, anyone who sells mutual fund in India is supposed to get themselves registered with MP, and only after that they can sell mutual fund schemes in India. So this is all about the setup of the mutual fund, what is mutual fund, and who set up mutual fund, and who are the intermediaries in the mutual fund. And in the next lecture we will be learning about the unit pricing, the NAV, and the classification of the mutual fund. Thank you.